Hi, welcome to Market Alert for Monday, the 29th of January 2018. So on Friday in the pound market moving high, you can see with all of the green buying there, then the selling came in, stopped the market for a bit, and then it decided to turn around, move higher, and then eventually started to make its way lower as the US dollar moved higher, which you can see here. This is the daily chart, and just move these out a bit so they become a bit darker. You can see at the moment there's a bit of support in the US dollar at the moment, which is only natural given how far it's actually moved lower over the last few weeks. So the pound at the moment is sideways to lower, and in the daily charts, just looking at the bigger picture there, you can see that the selling that we had here is taking effect at the moment, and there's some more selling on Friday as well. The volume's high there, another up thrust type bar, prices thrust up and then were sold into as the dollar recovered. But fairly quiet on the overnight for the pound, and longer term you can see that we have some buying there with the green bar. You can see that there over the last 2 weeks. So still bullish, but the market needs to breathe a bit there. Meanwhile, in the twilight zone in the Dow, this continued higher on Friday. Let me just activate that. Right, so it's just come back. So we had the buy signal. We then had a bit of a pullback here. Let me just turn off the parabolic there just to make it a bit clearer on the screen. Yes, we started off with again some buying, a bit like the pound. I see this moving up. Then we had a bit of selling there. But if I do this and we go to the retracement tool, to the high, to the low, and I'll just do that again, but take out the extend that one. From the low to this high, you'll see the market came back to the 76% retracement, and then we were free to move higher, which it did, but then pull back again, and you'll see a 62% pullback, and then we did the same thing again, where the market started to move higher and it pulled back to the 76% area again. And then of course you look at the moving average as well once the market's back above, and then it's just worked its way back to making new all-time highs. And then at the end of the session we saw the market taking off there, a bit of profit taking as in the red as people came out, but then it was free to move higher, and that's all it's done since. Made a new all-time high of 26,701, 299 points to 27,000. This is all within less than a month, and that's the way it's going to keep going at this point. The levitation in this market is no scene, well, it doesn't seem to be any end to it at the moment. It's certainly going to end badly. They always do, as it did for Bitcoin back in December, having put on huge amount, parabolic rise, and this will be exactly the same. This is very much like 1987 market before we had the crash. It will say nothing could go on forever. It's never done that. Of course, it is slightly different in the sense from 87 that this is central bank driven. They are participating in the market and doing their damnedest to hold it. But eventually, as the debt mounts, the yields continue to rise, the dollar weakens, and a combination of all of these things, eventually the whole thing will start to fall apart. But at the moment, it's a one-way bet to the upside with pullbacks, as you see here with the red price bars. But then once the market breaks out, it continues higher, and you see the market being bought back with the green bars on the following days as soon as you get some selling. So it's easy to see what's going on. There's no problem with the buying. But as if there is any selling, then it's brought back the day after, and then if the selling continues, it's the powers that be step in and then bring the market back up once again. News-wise, not a lot today, but this week we have got the non-farm payroll figures out on Friday, FOMC meeting on Wednesday. This will be Yellen's last one, and yeah, we'll see what happens. But again, you know, used to sit on the sidelines with news, but at the moment, because it's so obvious what's going on, the market will have a bit of a shakeout and then continue to move in the same direction. So in the implied volatility, this down on Friday 11.18 from 11.42. There's a bit of a range going on in this market. You can see there. It looks a big range until you actually look at the 10-year of implied volatility, and it is absolutely nothing for the whole of last year and this year. Very low volatility as the market just moves higher there. So sometimes what looks like a lot of volatility in a smaller time frame is absolutely nothing in a bigger time frame, and this is why I like larger time frames, because it allows you to step back and see the bigger picture and not get sucked into what looks like a market that's making some sort of point that something's going to happen, when in reality this is just a sideways move in a smaller time frame. And finally, let's have a quick look at Bitcoin. So Bitcoin survived the futures on Friday. It did move lower and then came back, and then Saturday and Sunday the market was green, but a bit of red on the overnight at the moment for Bitcoin. But it's still in this consolidation phase, and I'm expecting this to stay this way for some time, given the big move in the background. So nothing major to report there at this time. Right, that will do it for this one. Not much news today. We'll see. Usual story, I suspect, to shake out at the beginning and then move the market to the upside unless something comes out of nowhere. But other than that, same old, which is fine because it's predictable and it's very much tradable as well. Right, that'll do it. Anything to report, let you know. Other than that, as ever, thanks for watching. See you in the next one.